Welcome to Boni's Life. Today, we're dissecting the crypto market's extreme fear, diverging bank forecasts, and the looming Fed decision. Let's get sharp. The crypto fear and greed index just hit 11 out of 100. 11. The only things I've ever seen that low are my phone battery at a family function and my motivation on a Monday. Bitcoin is down 53% from its all-time high. Wall Street banks are fighting like aunties at a wedding buffet. One says $53,000, another says $150,000. The Fed decides rates in 2 weeks. And oh yes, there are missiles flying over the Strait of Hormuz. So, is this the bottom or the trapdoor? Let's get into it. Welcome back to Boni's Life on the channel where we read the whole market so you don't have to pretend you did. If you're new here, I run businesses by day, I watch charts at night, and I sleep somewhere in between. Hit subscribe so the algorithm knows we're serious people. Today, I pulled the last 30 days of market research. The sentiment data, the ETF flows, the bank forecasts, the Fed positioning, and the geopolitics. And I'm going to give it to you straight with the drama included because my goodness, there is drama. Quick disclaimer before someone sells their car on my account. This is information and entertainment, not financial advice. I am not your advisor. I can't even advise my cousin to stop borrowing my charger. Let's start with the damage report. June was Bitcoin's worst month of 2026, down 20.5%. 20.5? That's not a dip, that's a plot twist. And it wasn't just retail panic selling in the group chats. The big money left too. U.S. spot Bitcoin ETFs saw a record $4.5 billion in outflows in June. $4.5 billion said, "It's not you, it's me," and walked out. From the October 2025 all-time high of $126,000, Bitcoin fell all the way below $60,000 at one point. That's a 53% drawdown, half gone. If your portfolio was a pizza, somebody ate half and left the box open. But then July arrived and July said, "Relax, I've got this." Prices went green. Bitcoin clawed back to around $63,000 to $64,000, up nearly 3% week over week. The analysts are calling it Green July, and historically, July actually delivers about 7% average gains after ugly Junes. So the big question, the one everyone from Reddit to the trading desks is arguing about, is this real recovery or what the pros are calling an oversold rally window within a bear market? Translation for normal humans, is the patient recovering or did we just give the patient an energy drink? Here's the sobering bit. Only one of Glassnode's bottom signals is active right now. And in previous bottom years, August averaged a 14% decline. So the smart money advice floating around is take profits on the way up. Don't assume the bull is back just because the chart smiled at you once. Now this is my favorite part because the big banks currently agree on absolutely nothing. In the red corner, Citi just cut their 12-month Bitcoin target from $112,000 down to $82,000, and their bear case is $53,000. Their reasons? ETF outflows, weak investor interest, and U.S. crypto legislation moving slower than a home affairs queue. In the blue corner, Standard Chartered is holding their $100,000 year-end call like it's a family heirloom. And Bernstein looked at the same charts, the same outflows, the same everything, and said $150,000. Weakness is a buying opportunity, apparently. The spread between the loudest bear and the loudest bull is now 3x. These are people with Bloomberg terminals and research teams, and their answers are further apart than me and my gym membership. What does that actually tell you? It tells you conviction is gone. When the professionals disagree this hard, it means the data is genuinely ambiguous, and everyone is just waiting for a catalyst to pick a side. And there's one more ghost story making the rounds. Strategy, the big Bitcoin Treasury company, is described as being under extreme duress. Some analysts are whispering that if it collapses, that would mark the bottom, the same way FTX's implosion did in 2022. Crypto has a dark tradition. The market only bottoms after somebody famous falls over. Right? July 28th and 29th. The Federal Reserve meets, and this is the main event. Forget the undercard, this is the title fight. Here's how the market is positioned, and pay attention, because the numbers are spicy. Rates have been parked at 3.5 to 3.75% since late 2025. Inflation is still running at 4.2%, partly because of energy prices, and we'll get to why energy prices are up in a moment. Prediction markets have the Fed holding rates at above 85% probability. A rate cut priced in the low single digits. In fact, markets say there's a 76.5% chance the Fed cuts 0 times in all of 2026. Goldman Sachs doesn't see a cut until mid-2027. 2027, by then, my nephew will have finished the degree he hasn't started. So let's play out the 3 doors. Door number 1, a surprise cut. Almost nobody is positioned for this, which means if it happens, the move is violent in a good way. Extreme fear plus a dovish shock equals a proper short squeeze. The bounce stops being a bounce and becomes a rocket. But here's the catch. The Fed only cuts as a surprise if the economy is falling apart. And June's jobs report already came in ugly. 57,000 jobs versus 115,000 expected. So a cut would arrive wearing a paramedic's uniform. Door number 2, a hold the boring expected outcome. A hold moves nothing by itself. Everything then depends on the tone. If the Fed sounds hawkish, worried about inflation, pointing at oil prices, the bounce probably dies, and that $57.9K support comes back into the conversation. If they sound dovish, nodding at that weak jobs number, the bounce gets to live another month. Same decision, 2 completely different movies. Door number 3, and this is the one almost nobody in crypto is positioned for, net a hike. Rate hike odds are sitting at 21.9%, UP from 12.5% a month ago. A hike into a market that just bled $4.5 billion from ETFs, with strategy already wobbling. That's the scenario that fast forwards us straight to Citi's $53,000 bear case. No detours. 22% is not nothing, friends. 22% is my ex might text me this weekend odds. It happens more than you'd like. Now layer the geopolitics on top because the Fed doesn't decide in a vacuum. The U.S. has hit Iran with strikes 3 times this past week, the latest one just this weekend. Oil pushed past $72, and Tehran has declared the Strait of Hormuz, the little stretch of water that carries about 1/5 of the world's seaborne oil, closed until further notice. Here's why crypto people should care about the shipping lane. Expensive oil means higher energy prices. Higher energy prices feed inflation, and inflation is exactly what's keeping the Fed hawkish. So every missile is basically voting against your rate cut. The geopolitics and the Fed aren't 2 stories. They're 1 story holding hands. But here's the plot twist. Bitcoin barely reacted, the 3rd strike of the week, and BTC dropped 0.3%. It's holding around $63,800 like a bouncer who's seen it all before. Ether flat around $1,800. Bitcoin has officially reached the wake me up when it's serious stage of this conflict. That's either impressive maturity or dangerous complacency. And honestly, same could be said about me. Part of it is timing. Traditional markets were closed for the weekend, so crypto was the only game pricing the news in real time, which sets up the tale to watch: Monday's oil open. If crude gaps higher and Bitcoin still holds its ground, that divergence says crypto has stopped trading war headlines. If they both lurch, buckle up. So let me land this plane. Here's the honest summary of where we are. Sentiment is at extreme fear, which contrarians love, and structural bears say is justified. Both camps are loud, neither has proof. July's bounce is real money, but the consensus frame is bear market rally until proven otherwise. The pros are taking profits on strength, not aping in. The asymmetry: a Fed cut is a low odds rocket. A hawkish hold or a hike meets a market that already has one hand on the exit. 2 dates decide the next chapter. Monday's crude oil open and the Fed statement on July 28th, 29th. Whatever happens, don't trade with money you need. Don't marry a price target. The banks can't even agree within $100,000. And please do not make financial decisions based on a YouTube video, especially not the ones with laser eyes in the thumbnail. If this breakdown saved you 3 hours of doom scrolling, do me a favor. Like the video, subscribe, and drop a comment. Are you Team Citi at $53,000 or Team Bernstein at $150,000? I'll see you right after the Fed decision with the follow-up. Until then, protect your capital, protect your peace. This is Boni. Sharp, sharp,